Hello, you're watching Proactive Investors. Thank you for joining us. We're crossing over to Perth now and we're going to speak to Mike Rosenstrike, the Managing Director of HXG Resources Limited. Hi Mike, how are you?
Hello Karen, I'm well, thanks.
Good to see you again.
Thank you.
Now, your company has just completed a positive scoping study for advanced graphite processing. Tell us about the study, where it was conducted and what were the key findings?
Sure, look, we've done a scoping level study of our downstream processing of graphite material. We got a Perth engineering group called GR Engineering to do a plus or minus 30% examination of what happens if we take graphite concentrate and make it into a whole range of products. So our shareholders for the last year or so have been wading their way through these very detailed, very complex ASX reports, and finally in the scoping study outcome we're able to give some financial descriptors around what it looks like as a real business.
And it sounds like, it's a good find. They are positive findings. Any surprises with the findings?
Not surprises. I mean, we've always been confident that there's a really strong business case. So let's just have a look at some of those findings. We're looking at doing a staged development, starting off with a qualification, then moving to what we think will be commercial scale at around 20,000 tonnes of product per year. And then, subject to how the market develops on that, up to about 50,000 tonnes. And the margins on that, through the scoping study outcomes, are around about 50%. We're looking at operating cost per tonne of product of around $2,500 a tonne. And then we add in the cost of buying the feedstock. That's about $2,000 a tonne. So there's an all-in operating cost of $4,500. And we think on a conservative basis, we'll be able to sell a range of products at an average price of around $8,500 a tonne. So you can see, I think we're outlining a pretty strong business case.
That sounds good. Yeah, you've got a good strategy there with your plan ahead. What about the next steps after this scoping study? What is the next steps for a potential processing plant?
Sure. Look, there's a couple of key things in the scoping study. One is that we looked at two different locations. One location in the US, where we think we're close to our markets and can lock in a low-cost power source. And the other location is in Australia, where we're close to our source, or one of the source materials that we're looking at from Macintosh, and also reasonably close to our Southeast Asian customers. But power, in particular in Australia, is an issue. Now, and so that's two of the options that we have to look at more when we advance now to a feasibility study. The other thing is that we have a couple of options in terms of our final technology that we want to adopt. In our scoping study, we've actually assumed adopting established conservative technology in terms of the full operating and full capital costs of those, and we think there's actually opportunities to use more advanced and lower cost processes, and so that's what we'll be looking at in our feasibility study, which I think now the scoping study results certainly warrant us going forward on.
What are the likely products a standalone GPPP would produce product lines for, and also which markets would you be targeting? Would you know that at this stage?
Yes, absolutely. Well, GPP stands for Graphite Purification Processing Plant. That's what we're calling this business. And we are characterising it as a standalone business. I think our customers would actually want to see that we're not just devoted to one particular source for graphite feedstocks. Now, the markets that we're targeting are very consistent with the markets that we've reported previously. We're interested in being in the battery space, absolutely. We're also interested in being in industrial space, possibly displacing some synthetic graphite. And finally, with some of our larger flake material, we would look to be either making, say, synthetic diamonds for technical uses, or what we're really framing as, it's called an expanded graphite precursor. So we're not looking to get into the expanded graphite market as a finished product, but only a precursor. And we've done quite detailed assessments as to where we would sell these materials. And we think about 60% of our sales will go into the US and Europe, and 40% into the Asian markets, Japan, Korea, Taiwan, and China.
Great, and based on the outcomes of the scoping study, what time frame have you got for the next stage? Have you got dates or forward planning for that?
Yes, we do. The next stage is to pilot, refine material or concentrate samples. And we have our refinery, our qualification scale refinery coming online probably around August of this year. And that's being built for us by our technical partner based in the US. And that refining and then downstream work of that material will really, is really core to the feasibility study, which we look to have complete around the end of this year, and we look to making a decision to establish the qualification scale facility early next year.
Good. We look forward to seeing how that unfolds. And just finally, you have an interest in the Macintosh Flake Graphite project in Western Australia. Any updates on that you'd like to add?
Not really. I think the really important point is that this downstream processing scoping study is absolutely independent of the Macintosh project. We're not walking away, or we have it's just appropriate to report it and assess it on its own merits. So whilst we obviously hope to be able to take material from Macintosh, we haven't presumed that. So in terms of our feedstock price, we've assumed the full commercial price. Every tonne of material that goes into our plant, we're assuming we'll be paying US $1,500 for. Obviously, we'd like Macintosh in time to cornerstone that that downstream business, but let's see how the feasibility study that MinRes are working on comes out over the next few months.
Lovely to speak to you, Mike Rosenstrike. Thanks so much for your time.
My pleasure. Thank you very much, Karen.
Thank you. That's Mike Rosenstrike, the Managing Director of Hexagon Resources Limited.